Do you know, is there a good analysis or a good write-up on whether or not, I want to say, like, casually owning real estate is a profitable expenditure of your money versus just buying securities? Like, if you
Depends
take
on your
into
taxes.
sure, if you take
It
into
depends.
account
It
that
depends on
property
your level
taxes
of
are
wealth.
reasonable and you can make money, like let's say, well, I'll use a personal example, right? I have like a mortgage that I pay that's $900 a month, and I can rent that property for anywhere from $1,000 to $1,200 a month, right? So I'm making money there, and the asset is appreciating in value, right? If I were to like plot that and the average cost of the house over like a 10-year period versus just throwing that money into a 7% return account over the next 10 years, do you think that the house will normally beat it, assuming you're competent, or do you think that it's like 99% better to go with securities? Is there like a write-up of that anywhere?
I mean, this is basically risk-reward systems.
Sure.
Properties are generally less risky, so they'll generally have less rewards.
Well,
so
but
the people that are wealthier tend to have better options. But
you
the
agree
other
that you're
factor
like
then
a normal, like a bull or whatever, long term.
if you're doing casual investment where you're just buying like a little property and then you're just investing in it, you're not going to be beating the market in terms of the stock market. But if you're actually like a decent-sized company that not only does casual investing, just buying a property and sitting on it, versus like value add or development, I think the value add development and just casually sitting mixed would definitely outperform the market in terms of risk reward.
So then, do you think
I think
that
there's a lot of math that goes into that too, though, because you have to consider how much income you could potentially be hiding or deducting, through mortgage indebtedness. You have to consider.
I'll tell you right now
how
though,
big your mortgage is to start with,
Yeah.
because that
Does it
gives you
matter
a
what
larger
kind of market
percentage of your
you're in?
salary.
I'll tell you right now, though, is that the majority of the people that I see as big property investors are generally family offices that first develop their money with another type of company. For example, a lot of people doing fashion and/or cosmetics. What they do, their families, when they reach a certain level of wealth, they just stop doing their fashion or cosmetics line. They sell it off, and then they start investing in real estate almost exclusively. Which
Sure.
is kind
Yeah,
of
I've seen
crazy.
that too with like restaurant owners, flower shops, people that own retail businesses. Once they reach a certain level of wealth, then then the cost benefit analysis goes up a lot more because you have more income to sort of utilize, and
Yeah, when
you
you-
have more stuff to shield with deductions.
When you
Plus,
already
the
have the
returns are
level of
more
wealth,
consistent.
yeah, when you already have that level of wealth, there's no point in trying to like keep building it at a huge rate, like a huge exponential
Yeah,
rate.
you just wanna sustain it.
They'd rather just sit on it for the rest.
sure?
Uh,
So like, let's say like in my position, so like my goal or plan or whatever is pretty much just like, okay, like I own a house, I have a decent interest rate on it, for sub 4% or whatever interest rate, right? So I want to move out, right? Does it make sense to just keep moving, buying a house, and then you just move out and buy another house, and you just maintain all of the old properties and you just rent them
I would
out?
say-
or would
I
you
would
say
say
fuck
with-
it and sell them and just reinvest?
I would say with your level of income and stuff like that, I would say you're not at the level that you would want to just buy and hold real estate. You want to probably increase your long-term wealth higher. So I think I would say equity
Yeah,
would be a
and-
better option.
So would you-
invest in
I agree with
companies.
When
that.
you say
And you're not
increase-
subject to you can't take the same deductions after you buy. I think it's like you get one house, you get your primary residence, and then you get the acquisition indebtedness for one other home. So you can't get the tax benefits either after a certain while.
Wait, what
The
do you
only
mean by
time I-
that?
Well,
tax benefits they stop after a certain amount
Yeah,
of
there's
years.
they stop
how
after
do you
bought
spell
your
esteem?
primary
Because
primary
you're
home
not-
and one more. It's like a +1, I think. I don't
Yeah.
remember exactly.
Because you're not buying as a corporation or you're not buying as a business that deals specifically with properties. You're buying as an individual.
Right. The
Yeah.
whole point is that it's supposed to encourage, home ownership. It's like the American dream, whatnot. So that's why that tax carve out is there to begin with. It's sort of to encourage you to own your own home, right? So
Oh, so you're
once you
saying
own
like
more
what you're
than
saying
one,
is that I'm not
it's like-
optimally tax structured right now to purchase a real estate or to purchase a piece of real estate and diffuse those costs appropriately through an appropriate tax structure. That doing it as an individual doesn't make sense. Is that what you're saying?
Yes.
Yeah, because you've already presumably taken that deduction once, right? When
The,
you
the
bought your
main
first
options
home.
available to you at this current rate are, if you want to continue in the property market, you need to find other investors to magnify your gains, because obviously, $100,000 here and there is not really going to.
Yeah, I'm not.
Great.
Hold on,
Significant wealth.
before you go full fucking ass be fucking Hannibal. I'm not talking about like becoming like the next Donald Trump. I'm just talking about like.
No, I'm not
say-
talking about being the next Donald Trump.
Okay,
talking
sure.
about just
I'm not talking about like
magnifying.
leveraging other people's capital either. I'm not looking to do a round of funding and get $15 million to invest in Omaha real estate. I'm literally just talking about like slowly building up wealth over a period of time using my own income and not leveraging other people's assets or income.
Okay, so that's that was the main model of doing it. The other model of doing it is doing something more speculative, where it's kind of like those flipper movies or TV shows where the people like they buy a piece of property that's a piece of shit, they upgrade it, and they hope.
Yeah. And again, I'm just looking at it as something more passive, not like an active. Like if I was doing something like flipping, that I feel like that's like a totally different thing, right? Where you're looking for like a $30,000-$40,000 property, spend 10 or 20 renovating it, selling it for 7 or 8 or something.
You're not going to make much. You're not going to make much wealth being passive. I'm just saying up front.
Yeah, no. I'm not trying to make a lot of wealth. I'm literally looking. I'm just wondering, will something like this either stay even with or just barely edge out like the market? Like that's all I'm asking.
I would say, I mean, depending on
or at least keep
right
even
now with the Brexit. If like, for example, if you had British stock right now, I think you're better off with real estate right now. But
basically, my question is like,
you're better off stock.
Sure. Well, yeah, sure. Basically my question is, doing the real estate this way, am I likely to, after a 10-year period, at least be even with if I would have just put all of that money into some kind of investment and just saw it reinvested the dividends? Would I be about the same with properties?
You'd be about break even, because the entire point of properties is to be an inflation hedge mostly. Renting out properties does give you some kind of benefit, but I mean, depending on the type of tenancy and the kind of issues you have with the properties individually, you could end up just breaking even on the cash flows itself in the long term, just to maintain your current. It usually you end up net neutral, tied to inflation.
Okay.
You're about net neutral.
All right, that's all I'm asking. So then I'm not like, after like 10 years, I won't see like a negative 10% compared to if I would have just invested
you'll keep
like
your money as is.
Yeah, okay,
sure.
okay. All right,
that's usually how it works, unless there's a huge economic issue, something
that destroys the
happens.
local real estate market or something. Sure. Okay.
I mean, that's also what some people say. There's less beta risk with real estate, but I don't know if that's actually true versus
well, lately there's been a lot of
risk.
It's been a little too quick to move. The real estate market's been all over the goddamn place lately, and so it's kind of risky in the major cities like New York and Manhattan, and Miami and stuff like that. But
that's because all the Russians buying everything.
Yeah, they're actually exporting their market risk to the United States in exchange for us getting higher prices. So if you already own it, you're pretty much benefiting from it, but at the same time, you're increasing the risk of. For example, I just talked to somebody that said that over the last couple of weeks, London prices have fallen almost 25%.
Yeah, London. Well, London was one of the few cities that voted Remain too hardcore on that.
Well, because London, not only that, but London was one of the main places where people like Russians and Chinese
would locate their businesses. Yeah.
Because of how low risk the British market is, they actually exported all their risk to London through their capital, and now there's a huge downturn coming up because of this.
Commies.
Did you? I heard that they actually put a stop on their market today for trade.
That doesn't. I know the banks were putting
a lot of banks
stop
did.
on market.
See, I was being a little bit of a dumb memer, and I actually started investing in Barclays and stuff like that already, and I think I'm gonna be
Good work.
seeing
Good
some
work.
pain, but I don't really care, because I think long term, I think Barclays and stuff like that will actually last, because the British won't let it fail.
Hannibal, I have a question. So if Destiny formed an LLC and then he bought property, would that help him tax-wise at all? So let's say if he rented out the house as the LLC entity, not Destiny the person.
As an LLC, I mean, you're basically just passed through with the cash flow, so it doesn't really do much.
It wouldn't do anything.
different.
You would have to create like a C corp or something and structure yourself specifically for real estate.
Oh, okay. I was
Usually
The
what
only
happens
major
is we have
advantage is lawsuits. You can protect yourself.
Usually what we use
Protect
is
more
a
of your
structure
assets with diversified LLC.
Yeah, when we have an investment fund, we usually have a LLC that does the management, and then we have different corporations and different levels of the actual ownership of the building. So the LLC owns the building itself, which passes through like an S corp, which passes through another LLC that pays the management directly and stuff like that. It's great, like tons of fucking everyone.
Okay.
Like I think there's like 4 or 5 different companies you have by the time you finish buying one property on a larger scale. Yeah, but if you're just having one little LLC, the only reason to have an LLC is just to mitigate any kind of personal losses if you're renting it out. Which, I mean, that's a pretty decent thing to do in the first
You
place.
get pass-through tax treatment while you get a shield.
Yeah, and another benefit of having an LLC is that if you can cash flow the LLC, eventually you can be able to take out loans based on the LLC's cash flow. So you could buy properties on their own without using your own personal credit score.
That'd be pretty cool. Okay.
You also
Yeah,
won't be
if
able to
you're
get like a fucking mortgage with an LLC. Traditional,
Oh yeah,
like
I mean,
FHA.
it's definitely. A lot of people don't want to put mortgage through LLCs unless there's like a personal thing. But if you're part of a company that's had significant advancements in your
but
LLC
not like
tax,
Destiny LLC.
Yeah, no, probably.
Well,
not.
you're always going to have to worry about closely held corporations as far as the way that they're looked at, not only tax wise, but just money wise in general.
Okay, that makes sense. All right, I was just curious because Destiny was talking about forming an LLC or an S corp or whatever.
No,
so.
his reason for forming an LLC is for S corp treatment of like his Twitch money.
Yeah,
So
no, I realized
completely
that. I
different
just
analysis.
was thinking it maybe it could also help him with that also because I didn't know how
Well,
the taxes.
no, because the purpose for forming the S corp was for the way that the tax structure works is I avoid paying self-employment tax on a large or on half of my income ideally, right? But when you talk about like owning property and shit, you talk about like holding assets in another company. Like I don't think I could do that with an S corp. I would never be able to hold an asset with that S corp because I don't have any value in it or anything. I think that's what you're talking about, Hannibal, right? Where you'd have to show like a lot of cash flow going through.
Yeah, usually like you turn it basically to a management company that manages the property in exchange for the whatever, and then you cash flow through the LLC, and then you can take out a loan based on it. Well, but it takes forever. We're talking
Sure,
years
so
of
I
work.
got tier clipper, buddy. Tier 4.
Or you
At that
might be
point,
hire
it's
me
probably
just a couple
cheaper.
thousand.
Well, that's a tier 4 sub. Wow.
Oh,
Either
by the way,
that-
because of Brexit, like property right now is even better now in places like Miami and New York to purchase.
Yeah,
if
sure,
you
but
already
I
own
mean, oh yeah, but what I'm doing, I wouldn't really be structured to take advantage of anything like that. I'm sure you were in like Harkton or whatever are doing well. Or no, wait, Harkton doesn't do real estate, right? He just has.
it. Harkton owns a
Yeah,
property in
that's a
San
little bit, yeah.
Francisco, which at first, here's the issue. Currently, I'm hearing rumors in San Francisco that there's some kind of tech issue and that prices are starting to be less competitive.
Do you
or whatever?
do you feel like San Francisco is going to be like a really big bubble that like eventually somebody's going to be like, you know what, fuck
No,
this shit, I'm just
because
going to go
the
to.
city's so small. The city's
It's not.
so small
It's
to
not.
begin
It's
with.
not like a Miami
There's no
level
room,
bubble.
like-
It's every time the tech bubble bursts in San Francisco, it's usually like a 15% drop max or something
Sure.
like that, and then it resets.
Oh, I guess something like if a place like Austin or something else, like if a number of businesses actually started to relocate there and it started to look lucrative, could there ever be like a huge swap where all of a sudden the demand for San Francisco is like, fuck that shit, I'm just going to go to Austin, which I don't know why people don't do already. or
I
something
don't
like
think
that.
so.
I kinda
I
jokingly-
work in Palo Alto, or I did, and there's like almost an atmosphere there that's different. It's like New York versus, Miami for doing iBanking or something. It's just like there's such a concentrated knowledge bank and almost attitude there. Like the entrepreneurial attitude there is like, so it's like. It's something where people aren't going to want to move away from it. And
Yeah, it's like New York
I don't
City,
know.
right? It's like New York City. You can
yeah,
only
it's a
exist.
psychological
I
thing more than
jokingly refer to
anything,
Austin
but-
as the Williamsburg of San Francisco.
I've always said that Palo Alto and the whole Silicon Valley has got like a cult-like vibe to it that people are not going to
Yeah.
leave that easily.
Isn't the
Yeah, the
tax structure
culture.
of California really fucking brutal though? Aren't there like a
Yeah,
lot of like
You
regulations
pay-
and shit?
You
Like
pay a shitload of tax on everything.
it would be. I think it would be
It's the
really.
mindset that
Prices
people
are
like
fucked.
there. It's the whole fucking up your ass kind of deal where you like to just oh, I'm pro environment. Oh, you too. Oh, we're so
Yeah.
better. That kind of shit. They love it.
I feel like it would be really interesting if like another place, like I understand what you're saying that like obviously San Francisco is San Francisco because people are so insanely entrenched there, both in ideology and the fact that businesses are there and the concentration and everything. But I feel like it'd be interesting to see another place start to build up and then all of a sudden like I feel like a switch would flip where like
Well, I mean,
it's become
they're
a
doing
place
that
that's-
in LA, in Austin, Boston. Even there's a lot of IP biotech stuff, but there's still like when you talk about scale, it's like nothing. Like
Yeah,
compared
for
to
sure.
what's
Yeah,
in
right now, of
Silicon Valley.
course.
It's
Yeah,
been there
of
for
course.
40 plus years. So.
That's a good point. Yeah, that's a good point.
The other thing is if you're a big name
another San
corporation-
Francisco for entertainment, though. Like their
Doesn't-
entertainment production is kicked up a whole lot more than it ever has, like anywhere outside of San Francisco.
Isn't there a part of it like if you're a big name corporation, you can just like dip and go to in the middle of fucking nowhere and put your headquarters in there, and that's why like San Francisco is still sort of relevant because you have all these big name corporations and the city's not a rundown shithole. Where,
If I
you're
recall
fucking
correctly-
I mean, your goal is to attract talent too, right? You want talented people to go work for you. San Francisco has a good quality of life, first of all. All the big law firms, like my firm's there, so that's a big deal too. It's like all of your service providers are where you need them to be. The infrastructure is pretty well developed, etc.
Well, yeah, and
Aren't
that's
there a
just
ton
even
of,
in my industry. Like, it just seems like the place you have to be. Like, if you're a big YouTuber and you want access to studios, or you want access to talent, you want access to corroborate with people or whatever, like, you have to go live in San Francisco. Like, you can't live anywhere else. Like, you have to be fucking retarded.
Yeah,
So
pretty
I
much.
imagine it's probably amplified a million times more if you're like if you're in a tech job or whatever.
Yeah, it's like if you want to be a fucking actor, you don't move to like you know,
Nebraska, yeah, or or like North
Omaha
Dakota
or something.
Yeah, you would go to fucking where all the fucking Hollywood or whatever. I don't know, or if there are big other actor cities or some shit.